Hi everyone, welcome to Digital Expert. Today we are going to talk about a sector that not many people are paying attention to, the healthcare and hospital sector. So this is a sector that's full of opportunities but often overlooked. So in this video, I'll be sharing 6 lesser known stocks from the sector that has great growth and have the potential to give strong returns. If you like this video, don't forget to subscribe to this channel and please do share my videos with your friends and family or anyone who might be interested. Also check out this playlist for sector-wise stocks. You can see separate videos for stocks like data center, semiconductor, telecom, transformers, pharma, agriculture and many more. So let's get started. The first stock we are going to talk about is a healthcare company that has made a big name for itself in the Mumbai metropolitan area and in the Western India. So this company was incorporated in 2007. So this company operates 3 full service hospitals in Tain, Pune and Indore with a total operational capacity of 851 beds and a focus on high quality patient care. The market cap of the stock is 10,106 crores. The stock I am talking about is Jupiter Lifeline Hospitals. The current price of the stock is 1,520 rupees. So Jupiter Lifeline Hospital has 3 major hospitals. The first one is the Tain Hospital, which is operational since 2007. So this hospital has 377 beds and an occupancy ratio of 72%. And the average revenue per occupied bed of 66,700 rupees. The next one is the Pune Hospital, which was started in 2017. So this hospital has 375 beds and an occupancy rate of 67% and average revenue per occupied bed of 55,000 rupees. The third one is the Indore Hospital, which is operational since 2020. It has 231 beds and occupancy rate of 59% and an average revenue per occupied bed of 44,700 rupees. So all of these hospitals operate independently and is equipped to provide full services. And looking at their revenue breakdown, the Tain Hospital contributed about 54% of their revenue, Pune contributed 34% and Indore contributed 12%. So another impressive aspect of the Jupiter Hospital is their strong doctor to patient ratio. So their doctor to patient ratio is 32.89, which is quite good. In terms of the patient payment sources, the self-paying patients account for about 43.5% of their revenue. Insurance companies and other corporates contribute about 55.4% and the government schemes cover about 1.1%. So Jupiter is trying to expand its bed capacity to 2,500. Jupiter Lifelines is a fast-growing healthcare provider which is continually improving its services and the infrastructure. The September quarter results look good and the fundamentals also look good. Price to earnings ratio is 54.62, lower than its sector P ratio of 70.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 14%. The next stock is India's largest pediatrical hospital chain. So with 16 hospitals in 6 cities, this stock has become the go-to destination for children-centric and women care services. So this stock has an impressive infrastructure with 19 hospitals and 4 clinics, which is totaling over 1,935 beds and a dedicated team of 800 plus doctors. The market cap of the stock is 16,588 crores. The stock I am talking about is Rainbow Children's Medicare. The current price of the stock is 1,642 rupees. The company allocates a significant portion of its capital expenditure towards the interior of their hospitals. They offer a range of pediatric services including secondary care, tertiary intensive care and multi-speciality and quaternary care. The 1/3 of their beds allocated to critical care, and it's no surprise that the 10 hospitals they have is accredited to the National Accreditation Board of the Hospitals. Rainbow Children's Medicare has a strong geographical presence in key cities like Chennai, Vizag, Bangalore, Hyderabad, Vijayawada and Delhi. So this widespread reach ensures that high quality pediatric and women care services are accessible to a diverse population. They also provide assessment and evaluation of several infertility problems. Looking at their revenue breakdown, hospital services contributed about 88%, followed by the pharmacy sales at 9.2%, medical service fee at 2.8%, The September quarter results look good and the fundamentals also look good. Price to earnings ratio 71.64, higher than the sector P ratio of 70.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 17%. The next stock is one of India's prominent healthcare provider. They provide their healthcare services through their primary care clinics, multi-specialty and super specialty hospitals, as well as advanced diagnostic and treatment options. So this stock is the second largest hospital chain in India in terms of revenue within market capitalization. They have 17 facilities with 3,530 beds, primarily in the metro cities. The market cap of the stock is 94,307 crores. The stock I'm talking about is Max Healthcare Institute. The current price of the stock is 1000 rupees. So Max Healthcare is actively involved in research and they have a strategic partnerships with Deakin University, Australia and Imperial College in London. So Max Healthcare has 6 subsidiaries. So they specialize in secondary and tertiary care with a focus on oncology, neuroscience, cardiac science and many more. So Max Healthcare revenue is primarily driven from inpatient services, outpatient consultation, the diagnostics through Max Lab, home healthcare in the national patient services, digital platforms like Max My Health, research collaboration and subsidiary operations. They do online consultations and appointments through Max My Health app, which has contributed about 21% of their revenue. The September quarter results look good and the fundamentals also look good. Price to earnings ratio is 89.08, higher than the sector P ratio of 70.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 12%. The next stock is a Delhi-based healthcare company which operates through Indraprastha Apollo Hospital. So this stock is a super specialty hospital in New Delhi which was established in 1988, which was a joint venture between Apollo Hospital Enterprises and the Delhi government. So this hospital has approximately 710 beds and is spread across 15 acres and has a built-up area of over 6 lakh square feet. So this hospital has 52 specialties under one roof. This is the largest corporate hospital in India and the fourth largest in the world. The market cap of the stock is 3,916 crores. The stock I am talking about is Indraprastha Medical Corporation. The current price of the stock is 434 rupees. The company has operated on about 7.4 million patients so far. So they have advanced clinical programs like robotic cardiac surgeries, leadless pacemakers, and specialized gastro procedures. The company has launched a personal health check program called Apollo Pro Health using an AI to identify early risk of non-communicable diseases like diabetes, hypertension, cardiac ailments. So Indraprastha Medical Corporation is also focusing on international patients. It has received accreditations from the Joint Commission International, USA for meeting international healthcare quality standards. The company's diagnostic services include lab services, radio diagnosis, nuclear medicine, endoscopy, and blood bank. Further, it offers ambulance and air ambulance services as well as patient consultation services. Indraprastha Medical Corporation has reported a revenue per patient of 1,77,000 and a revenue per bed of 57,000. The September quarter results look good and the fundamentals also look good. Price to earnings ratio is 26.50, lower than a sector P ratio of 45.43. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 28%. The next stock is a leading chain of eye care facilities in India, offering a wide range of ophthalmology services. So their core services include cataract treatments, laser correction, corneal surgeries, retina treatments, and spin correction. The market cap of the stock is 2,361 crores. The stock I am talking about is Dr. Agarwal's Eye Hospital. The current price of the stock is 5,009 rupees. So cataract treatment is the largest contributor to the revenue, with the hospital witnessing a 24% revenue growth in this segment. So the company has arrived about 76% of the revenue from services, which include surgeries 83% and the treatments and investigations gave about 12% and consultations at 5%. The remaining 24% of the revenue came from product sales, including optical products 64%, pharmaceutical 33% of the revenue, and the contact lenses and accessories gave about 3% of the revenue. The hospital has a strong presence in Tamil Nadu and expanded to Rajasthan, Andhra Pradesh, and Kerala. It has added 36 eye vision centers under Dr. Agarwal's eye clinic brand and established 6 new surgical centers equipped for cataract surgeries. The company has experienced a 17% year-on-year growth in the number of patients served. Its workforce has also grown, with the doctor count increasing to 205 and the employee strength becoming about 1,133. Dr. Agarwal's parent company, Dr. Agarwal's Healthcare Limited, operates about 180 facilities and plans to expand over 300 centers in the next 3 years. The September quarter results look and the fundamentals also look good. Price to earnings ratio is 46.75, higher than the sector P ratio 45.43. Debt to equity ratio is higher than 1. Return on equity for the last financial year was 27%. The next stock, founded in 2004 by Apollo Tyre Group, is a prominent player in the Indian healthcare sector. So it operates about 541 beds specialty hospital in Gurgaon and specializes in areas such as orthopedics, oncology, cardiovascular, neurosciences, and invasive surgery. The hospital has received NABH and JCI accreditations, reflecting its standard in the patient care and safety. The market cap of the stock is 4,364 crores. The stock I am talking about is Artemis Medicare Services. The current price of the stock is 320 rupees. So Artemis Medicare has expanded its presence with 2 Artemis Life facilities in New Delhi and Gurgaon, offering over 70 beds. It also operates 3 daffodils by Artemis in Gurgaon, Jaipur and South Delhi, providing more than 100 beds. They have 8 Artemis cardiac care centers in various locations. Looking at the revenue mix, the domestic operation contributed about 76% of the revenue and the international markets gave like 24% of the revenue. The customer base of Artemis Hospital includes international patients at 29%, insured patients 31%, the domestic cash operations 20%, and the patients under government schemes is like 20%. The September quarter results look good and the fundamentals also look good. Price to earnings ratio is 67.48, lower than its sector P ratio 70.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 8%. If you like this video, don't forget to subscribe to this channel and thank you for watching.